Hello, can you hear me? All right, bro. Okay, I've just been here trying to testing out how this stuff works. So I'm not really sure. Hey, Dinacio, your name is Dinacio, right? All right. Okay, so today I'm gonna try to go live. I'm gonna take. I want to start this mentorship slowly, and from what I understand, from everything I have learned. By the way, my strategy is based on ICT, but I do yeah. So, but every now and again we're gonna be touching retail. But I guess most people understand retail, and it's ICT that is a little bit more challenging to the most people. So I will be doing that. Can you see my? You can see my chart right now. I have yes. You trade crypto, right? Okay, cool. But which market do you want to focus on going forward in the future? Like we want to concentrate on crypto. Okay. Well, I started off with crypto. The reason I start deviating myself from crypto was because of too much manipulation. Now, from what I know, the reason why crypto is manipulated, of course, is because it's unregulated. And these market makers on Wall Street, they love it because when they turn on their algorithm, it's they can pretty much do whatever they want, but they cannot do that in legacy market like the index market, bond market, or the forex market. So it's a little bit more difficult. So they could get fined and lose their license and go to jail if they do a lot of shit there. I I didn't come up with this. It is the people that used to work there. ICT have said something like that himself. And there is this guy called the Master. Uh, he has also said something like that. So these are guys that have won World Cup in trading, and they have been trading with uh, huge fund and with the ways, so to speak. I trade I trade legacy market. I So I'm going more into legacy market. So, but my former protege, Crypto Clover, and the other guys that is running that Traders for Profits Signal Group, they are the one that is mostly into crypto. So I taught them the same thing that I'm trying to teach other people. So that is how they are profitable. They're using it in crypto. Um, so I trade. These are the markets. You can see my screen, right? Okay. So for I'm just gonna use this as an example, and then I will go to crypto. So the way I take my, you know what? Let me just go to crypto right away so I don't bore you with this if you are not interested in this legacy market. So basically, how it works is this. Normally, when I was learning to trade, couple of yeah, for the past 1 year thereabouts, I've been trading with the top people, or I've been in their Discord, Jason Casper, uh, all these big guys doing with chart and all that thing. So they taught us, or rather, they taught me, if you're taking your levels, you take it on the weekly or on the daily, and then you put it above where the close is, where the daily candle closes, right there. That is how I was taught to take levels. You put it right there. Um, and if you're gonna take for like support, you put it right there. You get the idea, right? And then you can also go on the 4 hour. You can maybe have a custom made one, another one, and then you also put it, let's say. You have a different color, you also put it there, stuff like that. Um, but it's with ICT is different. So this is how I take my level, and this is based off ICT didn't teach how to take levels. But if you know what the points are, you will know what level to take. So basically, the way things work, ICT concept is based on an algorithmic theory that all these things is made by an algorithm. So this is not buying pressure like we say in the retail world. Oh, it's buying pressure that is making this go up. It is the selling pressure that is making it go down. It's not really like that. According to ICT, once the algorithm start buying, it doesn't matter how many people that is going to sell. You could sell all the EOS in the world, it wouldn't make much difference. It will just keep buying and buying and buying. And the same thing if the algorithm starts selling. So basically, if you are trading the opposite direction as the algorithm, you are not trading against other traders. You are trading against bank, against institution, against central banks. So uh, obviously, central banks and these other big banks, they do trading. So according to him, central bank, one of the ways central bank makes their money is through trading. So it's not just about printing money. So that is why it's good to understand how these things work. And anything above this place is called a liquidity. Like above here, it's called a liquidity, and below is called a liquidity. So what I usually do is this. I have I take this swing high. This is how I start. Oh no, I start from the weekly actually. Sorry. So I go to the weekly. At first, I see what the trend is. What is the trend? I'm like, okay, we are bearish. This is a downtrend. We are bearish. All right, okay. So I know which direction to trade. So the first thing to do is you looking at a weekly candle. This is a weekly candle. This is a weekly candle. So this time frame, all these candles are 1 week candle. So the thing you want to do is first ask yourself, is it likely that this weekly candle is going to go up, like it's going to go slightly up? Even if we are bearish, it might still go up a little, I mean, or it's going to expand lower. So that is the first thing you're going to be having at the back of your head. Is this candle going to go slightly up, or is going to go lower? So I usually start with this, know where my weekly liquidities are resting. I have template for all these things, so you're gonna see it. I have weekly. You see it right here, weekly, and my weekly is blue, so it's always there. And then I will just clone it, put another one here, weekly. Okay. As you can see, this, like I said before, anything above price, above the swing high is liquidity. Anything below it is is liquidity. Anything below it is also liquidity. Liquidity means buy stop or sell stop. That is where the money is. So you have to see it like on this day, or rather on this week. On this week, which was the first week of I don't know, was it? No, this week. What date is it? January. That particular week, this candle ended here, and then this one came, but it didn't close below it, right? You can see it didn't close, it didn't come down, or rather it didn't trade below this one. This one also came, it didn't trade below this one. So when you see these things, when you see it like this, you just know, okay, this area is liquidity, because there are stops in these places. So there is a lot of cash here. And when the institution, they come and then they push the price down, so they wick everybody out, because people are long here, they are going long, but their stop is resting here. So that is why we call it sell side liquidity. So if it's below, if it's down here, it is sell side. If it's happening here, you see there is a wick up here, and then there's also another wick up here. So the liquidity resting above here will be called buy side. I'm telling you, if you're going to learn ICT, these basic things are the key. If you can identify where liquidity is resting, you will be, how you say, you'll be extremely successful. Things that get people really wrecked or that get people unsuccessful is one, they don't know how to take levels, and they don't know which level they have to prioritize, and they don't know where liquidity is resting. No, they don't know where liquidity is resting. So before I will come back to this first. Let's so I take, you see, I have customized uh, my tools here. I use this to take my levels. Sometimes I could go to monthly, but it's not really needed. That is just extra. So I take the highest week and the lowest week on a weekly time frame for weekly candle. So this is the current week. I don't have to take this week. Uh, this week we end in 4 days. You know how to read these things, right? Okay, okay. And then I will move on to the daily. Now things start getting interesting. So for the daily candles, I can also see that, okay, this whole week we are going down for the past 1, 2, 3, 4, 5, 6 days. We'll be going down, so we're kind of bearish, and this is a higher time frame bias now. First of all, on the weekly time frame, we are bearish. Sometimes I do this whereby I just take I do something like this, just sometimes, and then I change the color to blue sometimes, and then I write on it just so I know that, okay, on the weekly time frame we are bearish, for example. Just so I Because if you are on the 15 minutes or 1 hour time frame, sometimes you get lost. You are not entirely sure what the higher time frame is doing, but this is not necessary. So if you know that on the weekly we are in a bear market, we are bearish, and then on the daily, what are we doing? Okay, on the daily, I would say here we are consolidating, but on the daily we seem to have broken. We sort of bullish on the daily time frame. We dumped, and then we consolidated here, and then we went up. So now, how do you, we broke exactly? I was waiting for you to see if you're going to use that word. So here you can say we broke structure on the daily time frame right here. So it doesn't matter if it's just a tiny bit, it's still a structural break. um, so you can say market structure break right there, whatever. So you already know how to read structure break. Okay, so now we are bullish on the daily time frame, and then we just, as soon as this structure was broken, that is when the bullishness started. So if you're hearing on YouTube, okay, we're going to the moon, we're doing this, we're doing that, probably not. We're probably just coming up here. Again, what did I say before? Liquidity. Price is just moving from a discount to a premium, and a premium to discount. So price is just going after liquidity. So what happened here was that price dump. I think this was FTX dump. I'm not really sure, or was it this one? Um, I'm not really sure, but just know that below these places is liquidity. Liquidity is I just call it money. There's a lot of money resting here. So they're going to push down the price and stop people out and grab that liquidity, and then go to the upside to do the same thing. So here they came down, grab all the liquidity resting below this place, below this swing low, below these swing lows here, and they took it down here, and then they take it up, grab the liquidity resting above here, grab the liquidity resting above here, and then they left this one intact because they're going to come back and attack it later, which they did here. So besides, after learning how to take levels, now we're just we just be taking the weekly. Now we're taking it down. We're taking it down. So now we'll take the daily level, which is I also mark my swing. If you see what I'm doing, I'm not taking the where the candle closes, because that is not where the liquidity is resting. We will come to that later. Yeah, you always take the swing low, the lowest wick or the highest, where the candle ended, lies the tip of the candles. That is where the liquidity are. Yeah, the tips. So I have a custom one for this one also. I have a template. You see, I put D for daily. So in this case, your chart will be clean. When you are looking at it, you will know what you are looking at. So I just turn on my magnet so I get the exact top. So now I know I have my weekly here, I have my daily here. So right now price is in between this place, and on the daily time frame we are bearish. Mm-hmm. Yes, because I want to take the closest high to the current price. I could also put actually I usually mark um, if we go to, let me show you this. For example, on the daily time frame, you will see that I usually mark out a lot of days in advance. So you can see this is what I did here. I took this. Now I've already done this because the indices market is closed on the weekend, so it's not trading today. Yeah, it's opening tomorrow or tonight. So I took this daily. I just mark out all this level in advance. You can do that too, but I'm just focusing on. So I can also take this. Uh, where is my clone? So basically, I will just clone it, just put it there, and then take here and take this one and take this one. So I have all of them on. I have all of them on. See, I call it higher time frame. So all these levels, I think most of them. If I turn this on now, you will see that I have levels. I'm just using this as an example because I have levels of all my crypto, all these ones. So if I go to Cardano, for example, you appreciate how I take my levels. I just mark out key points where I'm going to take swing points where I'm going to take a shot from. So catching this shot, this is crazy. Catching this shot, this is crazy. So this move that just came, you see, as you can see, I already marked at this level before this move came here today. This just happened. Yeah, yeah, yes. So knowing these levels in advance is the key. So now let's go through. This is how I take my levels. You can see I have my daily here. I have my daily up there, but I didn't take these ones yet. So because I'm expecting lower prices. So you can take multiple, but you just have to take the most important one. And I'm going to show you how to decide which one is the important one. Which coin were we doing? It's EOS, right? Ah, okay. It was EOS. Yeah, it's this one. So that is why I choose this one and this one on the weekly. So I can even take this, but there is no need to take these ones because the price already came and take out these lows because this is useless right now. These ones are useless. Yeah, but I'm going to show you something cool here. This one, it hasn't reached it yet, but there is an important aspect that I want to show you. You see, this week it is called an imbalance. You know what? I will come back to it. Let me take it step by step. So the way I decide is this. I can decide to take all the weekly highs and lows that price haven't touched yet, or I can just take the few ones that is closer to price, which is this and this. So if you were doing it, it's up to you. You can also say, okay, uh, I want to I want to just do everything so I know, so I get it done with. And then you just take your weekly. You can take this one too, but and then once you have taken the weekly level, the reason why you don't have to do all this long thing is, I mean, it's not necessary, but just take the relevant ones. And then if you have too many levels, yeah. So then I'll go to the daily. Again, I will do the same with the daily. I don't have to take, of course, there's no need to take this one. Price already passed through it. So there's no need for me to take this one yet because I already have this one. So price is going to go through this before it comes to this daily level. So I already have my weekly level. So as you can see, my weekly level is here. So I don't need to take this one, but I can take this one. I can say, okay, there is a daily swing low here. Just change it to daily, or I can just clone it, like clone, and then. So now I'm going to show you something which a lot of people don't, which is very, very important for ICT. If you look at this day, Wednesday, 15 February, and then Thursday, and then Friday, these 3 days, you can see um, this is a shorter candle. This is a shorter wick, right? Can you see it? Yeah. So, but this one, you have to look closely to see which one is shorter. So these two seems to be about the same low. So I will usually zoom in. Um, Now, when I put it there, you can't really tell which one is shorter, but they're almost exactly the same level, right? This is very, very, very important. Very, very important. So when you see this thing, you have to take note of it. It's called relative equal lows. It means that there are two lows that is close to close to each other. So this is a very good liquidity zone. So they're gonna try to pull the price down there. When they took this price low on this day, 17th of February, when they took it low, they purposely left this intact. They just took out this candle, but they didn't take this one out because they want to leave this liquidity here for a later day so they can come back and take it. This is very this is very, very important if you're doing ICT, which is what we're doing here. So usually I have a template. EQL, equal low liquidity. So I could just make this and I will put it here so I know that this is two lows in the same place. So when I put it equal low liquidity, it means that there is these two lows are equal. So if anywhere I put this, I will just know that okay, there are two lows here. Or I do this. I put a template called relative equals. So this is key to taking levels. Like I said, you have to know how to take your levels. If you don't know which level is important, if you cannot identify the liquidity, you are the liquidity, meaning you are going to lose. So I just do this here, and then I just drag this to the. Now I don't need to put two lines. I just put this arrow EQS. It means relative equals. So anywhere I see this in the future, I can go to 5 minutes time frame, and then I will know if I see this box. I don't need to see this arrow. I don't need to see the what is it called? relative equals to know. So I can go to a lower time frame, and then I will know this is relative equals. And then if it's low, below price, I will know it's relative equal lows. And then if it's above, I will know it's relative equal highs. So either one you want to do, you just have to know that, okay, this is important. And then if you look at this, for example, it is similar, but this candle is, you can see there is space here, right? You see this? Yeah. But this example right here, they were exactly the same level. So I prefer this type, whereby the old candle is lower, slightly lower than the new one. So usually I would put the same thing there, just like that. The essence is that this candle low comes inside this box, and this candle, they are both inside the same box. So anytime in the future, as this price is coming in here, I will be monitoring what is happening inside this box. I know it's going to sweep this liquidity. So that is how I do my levels. That is how I look at it. And then, oh, uh, so now we've taken the levels. We've taken the daily high here. We don't need to take this one, of course. Candle already. We need the low here. So this is already happening. Um, and then I will go to the 4-hour time frame and do the same thing. So on the 4-hour time frame, I will look for a swing. I will look for liquidity zone. I will look for this. For example, I will take this high, go to my template, and mark 4-hour. So even if I'm on the 2 minutes time frame, I will always know which level I'm looking at. This is a daily level. So on the 2 minutes time frame, if I'm looking for a sniper entry, I will know this zone up here is a higher time frame zone because I have it on the right side. Weekly, daily, and then 4-hour. Do you understand the hierarchy? Exactly. So now that is done. And now I will put all of them. I will just do something like this, create a box, and call it HTF, higher time frame. So usually that is how I do it, HTF, and then close it, lock it, then move it. So that is how I take, that is the basic way, sorry, that is the basic way I do my ICT level. Now, here comes the other part where you have to look at the fair value gaps. I guess you know that fair value gaps, order blocks. Okay, ICT order block is very, very complicated. Uh, you can easily find an indicator that will show you order blocks on your chart, but it's not really based on ICT concept. It took me a while to understand um, how ICT defines its order block and what makes an order block. However, fair value gap is pretty easy, that you already understand. Okay, but there are other levels that you need to take into account. So back to this taking levels. So what usually happens is that when you see a high like this, where you see the body of the candle, where you see the body of the candle right here. So this stop, instead of doing it the old school way, how they taught us to do it, you just take a rectangle and take this place. You just put it inside a box and draw it to the right side. I call this ICT called it a rejection block. So I have a template called RJB, mean rejection block. So you just drag it and see what is going to happen, how price is going to respect it in the future. So right here you can see, yes, exactly. You just take it from the body of the candle. So you just have to put it on top. Let me redo it so you can see it properly. Yes, yes, of the last um, tops. It doesn't matter if it's a down candle or a up candle. So let me use the stock index markets as an example. So I'm going to use this. Let me see. Let me go to the 4 hour because it can work on any time frame. So for example, on the 4 hourly, you can see here is where the body. You just have to look for where the candle closes or opens at the candle body. I have a document on it somewhere in the on the Discord channel. I would direct you to it after this session. Yeah, yeah. That is why I'm taking we start from levels, how to take levels. That is the first thing today. So if you look at here, this is a good example. All these candles, they all ended in the same place. This is not random. You can't tell me this is random. This is algorithmic right here. So you take a box like this, and then you just put it to where you know, just put it and then you drag it to the right. So we call this rejection block. It's just going to add to other things. So next time when price comes in there, you can start looking for market structure shifts or something. So what happened here was that let me see, find a recent. Was it gold? I think it was gold. It took a short from, or was it oil? Either way, how to do it is this: on a daily, when you find it, if you find it on the daily time frame, like here for example, here you would have already taken your top, your swing high, right? You would have already done that. That is before this price came up. Let's say on 30th of January, you would have already done this. You're waiting for this high to be taken out. But at the same time, you will also draw out your rejection block, saying, okay, because you could see that this happened. So you could draw your rejection block and waiting for price to tap into it. So now we're going to go to a lower time frame to see exactly how to enter. This is just an example, and this works on everything. When I mean everything, stocks, forex, index, crypto, everything basically. So what happened was that this high, take out this high, and then price dumped. So now you take your levels like we did before. This has to be daily. We're on a daily time frame. So now you're waiting for price to come up here. So now price is coming up there. Assuming you also took your 4 hourly, this one, but it doesn't matter. Now you're waiting for price to come up here. So price, I usually go on the daily and then 1 hour. So on the 1 hour time frame, you could see that price took out your high, right? It took out your daily swing high, and then you also broke above your rejection block or box, whatever they call it. So right now you're just waiting for price to dump, because why? Price is going after liquidity. Now it's taking out this high. There's a lot of liquidity here. What is it going to do next? It's going to come back to these lows, this low, this low, this low. It's going to take all this liquidity. That is exactly what happened here. I took some of this trade, but it wasn't a lot. So we go to 15 minutes time. We are looking for market structure shifts. Sorry, I'm new to this live thing, so for my just scrolling anyhow. So there is no direct market structure shift here until you see within the in the 15 minutes time frame, a lot of things happen after taking out this high. It went up, it came down, it went up again, it came down, and then it went up again. So it keep building liquidity and taking it out. This is what we call three drive pattern. Three drive pattern. Remember it when you see it like this, and then it like this, and then like this, and then it consolidated here. So if you were watching this, yeah, it consolidated, and then what it was doing here was building liquidity. It was building liquidity, so people were thinking, okay, you're already taking out this liquidity. Now we're gonna go, long or something, and then it went up just to dump. So there is something ICT called accumulation, manipulation, and distribution. So this is the accumulation phase, and then that it manipulated people thinking that it's gonna go up, and then it dumped. So this is the distributing phase. So it is distributing all the accumulation it has made here. So that is how the algorithm work. It works in three ways: accumulation, manipulation, and distribution. So this is ICT call this power of three. Yes, ICT, ICT call it the power of three: accumulation, manipulation, distribution. So now here you can see it broke the structure. All this while it didn't break structure to the downside. If you can see here, it didn't go lower than this. This didn't go lower than this. It didn't go lower than this. So it was keeping all these lows in place, but it keep taking out all the highs. Usually, before a price make a significant move to the downside, it will usually take out a short-term high. So it will take out the high. Or before it makes a move to the upside, it will usually take out the low. So if you were watching this price and you know this theory, you will know that, okay, now that it went high, take out these ones, it's likely going to move lower. Because if it was to move higher, it would have taken out these short-term lows. It does that all the time. It does that all the time. If you look at this one, it came here, take out these lows before moving higher. Just go back to your chart when you have time. See how price usually move. Here, before coming lower, it was doing this, but it went back up to take this liquidity, and then it moved lower, and then just continue dumping. So remember this, price will usually make a little move up to move lower, or do some move down to move up. So here, this is a good example of that. It went up, take out this liquidity, and then move down. So you will now mark here. So this is your market structure shift. Because this is really expensive. This is remember, price is moving. Forget about support and resistance. Forget about all those things. If you really want to be successful with ICT strategy, you have to forget about everything YouTubers are telling you. Oh, it's buying pressure, it's selling pressure. We have that significant resistance. We have that there. It's just going to make you doubt yourself. It's just going to make you doubt your ICT. It's just going to make you doubt it. It's not. Yes, yes, that is why I decided to start with taking levels, because even this I'm telling you now, we're still going to repeat it again, and when it's time, when it comes to it, you're still going to find it difficult because you were taught differently before. So it is easy for people that is just coming into trading to just start learning ICT right away because it's going to be hard for someone like us who already learn it in a different way. We learn the wrong way, you know. But gradually, I am getting used to this new system. You know, I'm not going to lie to you. I'm really good with ICT. I'm good with trading, but there are a lot of things that I myself am still learning. But these things is now very. I can easily see these things, and so I don't take levels the way I used to do before. I will open my old chart for you before we close, so you can see what I mean. Anyway, you have to understand that price is going after liquidity and coming back to liquidity because once we take out an old high, you remember on a 15 minutes time frame like this, you'll be looking at it. But if you don't have this daily time, this daily level here, you wouldn't know. You might forget what you're looking at. But this is a higher time frame level, right? That is why it's important to always take good levels. So now every time it take out a significant high or a significant low, it's going to retrace back. It's going to go back to liquidity. It is going to do that. So now we are in a premium. Price is moving from a premium to a discount, from a discount to a premium. That is how it works. I think ICT call it, yeah, discount premium. So every time we take an old high, then the price is at a premium. Then every time we take out an old low, then it's at a discount. So it means that the price is cheap. So it's going to buy cheap and say high. So right now, it's sold at this high level. You know, short means selling and then long means buying. Yeah. So now it has sold up here. So the price is going to move down so it can buy again cheap. So this is premium zone and then low is discount zone. So now that we see that, okay, the price broke structure here on the 15 minutes time frame. Now you go to the 5 minutes time frame. I'm just using this as an example case study. We're looking for a lower time frame entry. This is where you're going to hunt for your fair value gap. So if you are going to take this short, you either wait for a fair value gap, either you wait for, now even when you come to a 5 minutes time frame, you could see here, okay, there is no fair value gap. All the candles are overlapping. It's overlapping. It's either you just go in or you could go back in here and think about if you didn't wait for this 15 minutes market structure break, maybe you were looking at it from on the 5 minutes time frame. You want to wait for break of structure. Then you could have entered anywhere along because this is a market structure break right here, right? Then you could have entered here, put your stop loss above. Usually we put your stop loss above here, then you'll be taken out here. But in this case, you could have put it here and then you enter. Or you wait for this 15 minute structure break. And then let's go to the 2 minutes. Let's see if we can find an entry. This was a very, very crazy move. So I don't know if we can find an entry. Unfortunately not. Well, I think I think you could find something here if you look close. If you look closely, is there a space here? No, 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 no. Here, right? So this is where you will enter, right in there, in here. So I usually have my chart like this. I have my 1 hour here, I have my 15 minutes here, I have my 5 minutes and my 1 minute. It shows on all. Yes, but I'm going to show you. Okay, so now you see how you can take your levels. So this was our entry. So I'm just gonna. So this is where you will enter, and this is what happened to you afterwards after you enter there. So this is what happened to you. Because how would you know where the price is gonna go? The next level of liquidity is here. This will be where you would take your first partial. This is your TP1 right here. Yes, lower time frame TP. Yes. So this is where you take your TP because you entered on a lower time frame. That is your entry. So you will start looking. You will start the way it's also in the document that I put out. You take your profit. Your first target will have to be. This is what we call internal liquidity. So this is where you because you will be looking for the next point of liquidity. So the next we call it buy side. Sorry, sell side. Where's the next sell side liquidity? So sell side liquidity is here. So this is where you take your TP. Sell side liquidity means liquidity on the downside of price. Price was up here, right? Buy side liquidity is here. So if I was to look for uh, buy side liquidity, it would be up here. I also have a template for that. It's called buy side liquidity. So I will know when to take my profit. This is called internal liquidity because it is a lower time frame. It's inside the price. You know, it is a very tiny lower time frame level. So it's called internal because it's inside internal liquidity. So you will take your first partial here, and then you take your another partial here, and then you might close. You take another here, and then just see what is going to happen. You know. So you could take another one here and if you see this accumulating, do more analysis and then add to your position right here. So you see this move, this is what happened all the way from 7 o'clock in the morning or during one day, you know, this whole thing happens. So this is how I enter. I look for setups starting from a higher time frame levels and then working my way to a lower time frame to the 2 minutes. So if I didn't find fair value gap here in the 2 minutes time frame, I will go to the 1 minute. What is important is this: you take your levels, you know where your liquidity is. Like I said, if you don't know, if you cannot locate the liquidity, then you are the liquidity. So you see this happening. Price already came this high. Price came down. Take out. Now, remember what I told you about equal lows. You see, when this price came, it didn't take out this candle. So this is where you you would have marked, okay, set side liquidity, for example. So liquidity, it dropped. It took out all these lows, all all the way here, and then it went up. Remember what I said, before price goes down, it's going to take out uh, a recent high. So it went back up, take out this level. And you know, why did it leave? First of all, you have to ask a question. Why did it leave this level? Why didn't it just take it out? Why? Because it's engineering liquidity. The people that keep their stop here, now they feel safe. The people that is longing, they have traded their stop loss to this place. So the price came here, they were like, oh, that was really close, it could have taken me out. Gosh, I was lucky. Now they are more happy. Now they are happy, they keep their money there, and they're like, okay, the price is going up, they think they're going to go to the moon or something. Think they're going to come up here. This, you start seeing all kinds of indication that is telling you, oh yeah, we're definitely going to 2000 something, I don't even know what the price is. But this is when you hear people start shouting on YouTube, assuming this is crypto. It doesn't matter. The same principle applies. Oh, we're going to the moon, Bitcoin to 100K. They start telling you why Bitcoins. You start getting convinced yourself. You're like, oh, definitely, we are going to the moon. But nobody's telling you anything about how this algorithm grab liquidity left, right, and center. So it left this liquidity intact on purpose and then went up here and did all those things that we saw in the 1 hour time frame and where we just came from. It came up here and did that and then came back. It came back with full force. It came, did this, and then the next day it did this and then continue selling. So right now, if you're looking at the weekly candle, you know we are definitely bearish on the weekly. So the next area of liquidity for the weekly candle is this. So if I have to predict, is this weekly candle likely to go higher or lower? I would say lower. This is where the weekly candle is coming to. So this is how I anticipate this is where it's coming to. And then if you look at it on the daily time frame, here, this is a this one right here. You can see the wick. So this is the next draw on liquidity. Besides, we have a fair value. We have a order block right here. So this is an order block. The candle already touched it. This, so this candle might actually do a little bit of retracement here because now we already feed this tiny fair value gap here, and then we tap into this order block. So we already feed this level. We're already inside this fair value, this order block. So this is ICT order block here. So, but this is my next draw on liquidity. We call it DOL, draw on liquidity. It means where is the price likely to go next. So this is gold, by the way. If you look, let's see what we see. If we look at, as you can see, I already mark out this place right here. On the 4-hour time frame, if we go to the 4-hour time frame, you can see I already marked it out, this one, and the price is just going to. So tomorrow morning when the market open, I'm going to be waiting for this low to be taken out, and then I will go to 5 minutes time frame and look for a break of structure, a bullish break of structure, so I can long the retracement. And where will I be aiming for? If I go to the 1-hour time frame, I will be aiming for around this zone right here. So I will be looking for the price to come here, take out this liquidity. Now, on the 1-hour time frame, what can we see? You remember what I said? Equal lows. So this is a lot of liquidity here, right here. He already did take out all the liquidity that was under these candles, and then it retraced up. So now on Monday, it's going to take out this liquidity, probably take out this 4-hour time frame. So I'll be looking for something like this. Come back and tap into something like that. You get the idea. Yes. So this is my higher time frame levels. I'm waiting for it to take it out, go up, create a fair value gap here, tap into the fair value gap or order block. I have a lot of things that I'll be looking at. I will be looking at this inside a smaller, lower time frame, like 5 minutes or 2 minutes, looking for a fair value gap to enter and then long. Yeah, interesting. So all these things I'm saying is what ICT taught us, what ICT taught me. I'm just saying it on a one-on-one level with you and using different explanations. If you were to watch ICT course, which I recommend everyone to do, he talks about it in a very a unique way, so to speak, and then he talks a lot of bullshit that you are not interested in, So yeah, yeah, people get really really frustrated and they get tired. But if you can put through, and then yeah, it has its reward. I was determined that I want to learn it, you know, and I have decided that okay, I'm going to teach it to my community. I just want to start this out and grow. I want to take people along with me, and if we take one thing at a time, right now we are focusing on taking the levels, how to take proper levels. So from what I've shown you so far, you can see how important it is to take proper levels. I mean, yes, 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 yes. It's extremely difficult. Now we haven't even gone to the juicy part. There are a lot of things that is really going to blow your mind with ICT. This is not my invention. I'm not taking credit for it. I'm just rehashing what ICT have taught me. So, so uh, that is that. And then remember, you start from your weekly, and then you take your daily, and then you take your 4 hourly. That is how I take it. And then you have to remember that if you see this, if you're looking at a chart, now we're on a 4 hour time frame. You're looking at, if you see that okay, this area, just remember, if the area look something like this, if you're looking at areas that look something like this, just know that this is a very good area, because above it, right up here, right up here is what we call buy side liquidity. Don't forget it. Buy side liquidity. It means that there is a buy stop. They call it buy stop. These are terminology that we really don't use in the crypto world. So you have to start learning new things. You have to start using the right terminology. Otherwise, it's not going to make sense for you. When you see this happening, this is jagged. It's kind of smooth top, and under is kind of smooth. So below here, we call it sell side liquidity. So you can below it, we call it sell side liquidity. So price is just doing this. It's just taking out internal liquidity up and down. It's just doing. It's not really doing much. So it's in a consolidation. Now, the way I look at it, when I see this happening, I'm not doing much. I'm just going to wait to see which side is going to be taken out first. So if I see this on 15 minutes time frame, or even the 1 hour time frame, let's say I see this on the 1 hour time frame, I will be thinking, if I see this on the 1 hour time frame, but on the daily time frame, I am bearish. So I know the higher time frame is bearish, and I see a consolidation on the 1 hour time frame or the 4 hour time frame. I'm seeing this sort of movement. I will wait to see which side is going to be taken out first. So if this happen, if it happens like this, um, then I know we are likely going to go down, because it's taking out. Once that happen, I'll wait for market structure shift. Usually I will get it somewhere here, and then looking for, we'll be aiming for a higher time frame liquidity hunt. So if you look at this pattern right now, just pay attention to what happened. This is 1 hour time frame, and tell me, does it look similar to what happened here? It was doing this and then went up and then went down. Is it similar to what was going on here? And then it went up, take out all this liquidity, and then it went down. If you look at it in a way, it's similar to what was happening here. You're just doing this chop, 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 chop. So if you were doing this looking for a buy or sell, you are going to get wrecked. Of course, you could scalp this in the 5 minutes time frame, but I wouldn't recommend it. So I just look for daily level, 4 hour level, 1 week level, higher time frame levels, and then I go to a lower time frame to look for this type of thing, consolidation, and then remember it is fractal. This thing it can happen on any time frame. So if you just go through price, you will see the same similar thing. Now remember that this is gold. Now let's go to EOS. Now, does that reminds you of what is happening here? Exactly. But what time frame is this? Daily, right? But we discovered this on the 1 hour time frame for gold. Like I said, price is what? Fractal. Fractal means that what you can see on the 1 hour time frame, you can see it on all time frames. So that pattern was happening exactly on the higher time frame here on the daily. Of course, you can be doing this, you can be scalping this on the lower time frame like 1 hour, 15 minutes. Exactly, you're paying attention. So if we take out the candles, without the candle now, you will be wondering, but this is exactly the same thing that happened here. It took out the high and it went down. Came back into this fair value gap and went down. EOS. Let's provide the candle. It did this. This is exactly what happened. It did this. It take out this low. Take out all this liquidity. Where did it come into? Inside this fair value gap. So this is why when you are taking your levels, you have to, as this is happening, he already came into this fair value gap here. It could have as well gone up, but when it started doing this consolidation, it was just engineering liquidity. This is called accumulation, manipulation, and then distribution. So again, the power of three. We saw it in gold when we did that earlier. This is it also. And in gold, this is accumulation. And then it manipulates you, it tricks you going going long. You think you're gonna go long. Okay, we're going to the moon. You start seeing people like Carl and all this stupid crypto. I'm sorry, I don't mean to insult other people, but they're really stupid. Oh, we're going to the moon, and because you are a noob, you don't know much. Like I didn't know much. We don't know much. We assume these people are the expert. We like, okay, this guy said we're going to the moon. This one said we're going to the moon. They bring us some stupid indicator to convince you that we're going to the moon. You check your RSI is telling you okay something else. MACD is telling you something else. Whatever it is, channel is telling you something else. But if you just understand the simple concept of algorithmic theory, which is price is moving from expensive to cheap. From cheap, you buy it cheap, and then they sell it expensive. And then they sell it expensive, they're gonna come down to look for a cheap price. That is what they do. They don't care about anything else. So that is exactly what was the algo was doing here. This did not have anything to do with how many people were buying EOS or selling EOS. If you can have this at the back of your mind all the time, you are going to be successful. I guarantee, I tell you that. I definitely tell you that. So if you mark out this uh, order block, sorry, not order block, what is it called now? Fair value gap. You mark it out. Okay, you have your fair value gap. Okay. Now you can see that price have been dipping into this fair value gap multiple times. But if you look at this fair value gap, this is also another thing you have to remember. The middle of the fair value gap is called a consequent encroachment. It's the 50% level. So as you can see, all the tools I'm using is customized. I have done it to fit what ICT teaches. So I just take this. You know these two, right? It is yeah, GAN box. So if you go to the settings, you just deactivate all the other thing. Basically, people use fib to do this thing that I just did. They use fib, but a lot of them don't understand that you can actually do it like this. Because basically what you want to do, you want to measure the 50% of an order block or a fair value gap. In this case, a fair value gap. So you just go to the settings, deactivate everything, just keep the 0 and 1 and 50%, which is 0.5. Just keep those on and save it as your default, save as, or whatever you want to save it as, if you know what I mean. And then, yeah, okay, good. Then you just have it like that. So you just pull it anytime you want. You just pull it and measure out 50% of your fair value gap. So I use this a lot. I'm going to show you what I, you know, uh, yes, because this is how I think. It has already tapped into the fair value gap here. Remember, we're on a daily time frame, right? It's already tapped into this fair value gap multiple times, one, two, and then now you already know. First of all, on the daily time frame, we are bullish. Remember what you're looking for. We are bullish. So right now we are in a consolidation. So because we are bullish on the daily time frame, we already came here, but there is still liquidity up here. So this is where you are hoping to long to. This will be your target. So assuming you've marked it out as a target, so you will call this buy side liquidity. So this is where you're looking to go. This is your terminus, or this is your aim rather. So you're watching price consolidate. Of course, on a lower time frame, you could be scalping this up and down. You could take multiple trade here, but that is a whole different ball game. That is not what we are doing right now. Uh, but this concept I'm teaching, you can apply it. That is what I mean on the lower time frame to look for the same thing. So you can long from here to here. So you can short from here to here. So you could have done this multiple times. However, now we're focusing on this place. You know, because you've taken your levels, you know that this will be your swing low. This will be your daily time frame. You would have already know this is your daily time frame. So, and then there is liquidity here. You already know that, okay, this low, this is lower than this one, meaning there's a lot of liquidity here. So it's likely that this candle is going, what if this candle comes back, take out this low and this low, and the algorithm always or tries to go to the 50% of a fair value gap. So anytime you're looking at a fair value gap, you have to look at 3 points. There is a 3 important points to a fair value gap: the high of the fair value gap, the main threshold, the consequent encroachment, which is the 50% level, and then the low of the fair value gap, which is if the price comes down, which means okay, it feed the whole level, but it doesn't have to. It's either you tap into it like this, go back up, or it come into the midpoint. In this case, it came into the midpoint because right now you are already looking at multiple things. One, we are consolidating on a daily level. We are consolidating here. And if this price is to continue moving up, the chances are that it's going to take out a short-term low, which is this candle. It can also be this. You can as well just take out this one and start going up. However, you already have this level drawn down, so you'll be monitoring this level as well. Normally, you will put your alert here, this point. So this will be an alert, this level. Remember, we are on this day, so this day hasn't happened yet, right? So we just, yeah, okay. So you put your alert there so that you know that price is coming in there. Usually we just press something like this and then add alerts. Yeah, I guess you know how to do those things. Okay, okay. So now let's see what we can see inside this level, inside this little place, how we could have anticipated this. Let's go to first. Let's start from our 1 hour time frame. So this was the daily low. This is what was happening. Remember, I told you uh, that it is fractal. You see, before it went lower here, it came out here to take out this high. It took out this high. So you could have as well taken this, you could have also shorted, taken out this short, right? So you could have shorted into this level and then long it. So now on the 1 hour time frame, the price came in here, went out, came back. So probably during this 1 hour time frame, you will see, what do we have here? A rejection block. This is where you would have put that thing. Right there. No, rejection block, remember what I said? Rejection block is when the body is in the same place and then the wicks are on top, or there is no, this is a rejection block. Anywhere the candle closes together. Yes, yes. So it's a rejection block. So when this happened, when your low, this was taken, and then price tapped into the 50%, was it? This was the 50%, right? The midline, this green one. Yeah. It tapped into the 50%. Like, okay, it has taken out this daily low, which is the purple one, like the pink one. It's taken it out and it has tapped into 50% of the consequent encroachment. We call it consequent encroachment to 50% of the fair value gap. And price went up. So now you are here. You're either thinking price is going to keep going up or maybe it's going to come. But either ways, you just have to just mark, okay, I have a rejection block here. Price came back, tap into your rejection block and went. However, this is what you were waiting for. You already got it. You wanted price to come in here and you already got it. So this is where you will be doing what ICT called the 2022 model, structure break and all that other business. So this will be your structure break right here. So you will look for, at the same time, you will mark out this place. What do we have there? Structure break. Then what is the next thing? You're looking for an entry. So a fair value gap. I see, like I said, I have everything on template, all the important. So I put it there, 1 hour fair value gap. So this is how you get your entry. Price came here, enter, and you will put your stop loss below here. By the way, the fair value gap was this low, yeah. Or it consolidated here actually. It didn't just go up. It consolidated here a little bit. It created some hope for people, and then yeah, you see, consolidated, took out the low, and then off you go. So you can see that everything that we talked about, everything, this pattern is everywhere, everywhere. So even this one, when we're there, you could see what it did. It took out the low, dipped down, took out the low, and then went up. So if you were looking, if this happened, structure break, this has happened, and then a bullish structure break, and then you're watching this, just this is usually the type I would say bet the farm, because the higher time frame target is all the way up here. Now, if I enter here, this would have been my entry. This would have been my entry. I could take out initial partial right here. I'll take a little, because probably it's going to keep going down because we were bearish, you know, uh, for some time, at least on the lower time frame. Or I'll wait. I can take my first partial here, and then I will move my stop loss here, because I don't think it was going to come back and do some stupid business. But actually, it did come back here, though, because it took it out here. I don't know if this was news, but somehow this candle, you can see it was a doji, some form of a doji. It just whipped front up and down, and then did some damages, and then went up. So you would have been careful there. You probably would have been stopped out, but if you took profit here, for example, and you move your stop loss, you would have already been probably be stopped out. Either ways, point is you got your entry, you aim it somewhere up here. Now, once you enter here, you have to be looking for the next area of liquidity. This is 1, 2, potentially 3, 4. So these ones are internal liquidity. These are the smaller liquidity zones. Here, here, this is internal liquidity here, and then eventually here. So this is at the type of areas where you want to collapse your trade, but we are still in the 1 hour time frame. So if you go to the 4 hour, for example, so you could have taken some out here, and then majority out here if I were you, if I was one doing this, and then let the rest run. And then eventually we came back up here. And what do we have up here? We have those, we have this, we have those, and then we have that. So that is how I apply. So this is just a basic ICT entry strategy. There are other areas we're going to go to, but I don't think it is wise to go through everything now when it comes to levels, because inside this week there are other levels that you have to take note of, which is also important. For example, this week, this one, if you use that tool, you measure half of it. You see how this candle came right there. So these are the things that I do to get what we call like a sniper entry. It came right there. So um, this is not random. So this candle itself, this week, is called an imbalance. The week is an imbalance. So ICT always says look for the 50% of that week. So if you look at some of my levels, I think I have something called, like, let's say Dixie, which is the USD, the dollar. Go to the 4 hours. I have become really good at taking levels. I just have to. So I take levels like this, for example. This is what is called a volume imbalance. I mark it out. 50% of that volume imbalance is also important. And then I have another file called extra zones. So this, for example, I have labeled them CE of daily BC. It means the 50% of the daily order block, sorry, fair value gap. So if we go to the daily, the 50% of this, that is that line. So at the same time, consequent encroachment of old daily week. So I have to label them so that I know exactly what the levels are. So this is an old daily week. So if you take these two again, you measure from up here to the low. So this extra zones is important. The same here, I measure up my volume imbalance. This is on a daily time frame. There's a volume imbalance here. So price is going to come back to this and fill it eventually. You've heard of in the crypto, you've heard of we have a CME gap there, we have a CME gap there, blah blah blah, and all those stuff. Yeah. So these are the sort of things that they're talking about. Yes, because for me, for my legacy markets, I get my data from, for example, if you look at this is I pay extra for this, so I get it from the CME. You see, CME, you can see it right there. Um, CME meaning something, remarkets data. So yeah, either ways, you will see those gap all the time on the smaller time frame also. It's everywhere. You see there is a gap here. Even if the wick have gone into it, it is better that the candle comes and closes the body above it. So that hasn't happened yet. So that is why I mark it. And then here you can say that is another level. This don't want to confuse you. So this is a daily order block. This candle is a daily order block. So I put it here D/OB, daily order block. So when price was coming here, price was rejected here. So it consolidated here before going higher. So right now we are very, very bullish on the dollar, which is one of the reasons Bitcoin and crypto was dumping. And today it seems to be pumping a little bit. You can see EOS having a little bit of a pump here, and other crypto also. We're having some pumps today. That is because yesterday, usually on the weekend, if it dumps on Saturday, on Sunday it will pump. If it pump on Sunday or Saturday, on Sunday it will usually dump a little. So this, next time we do levels, I'm going to show you how to take all the important aspect of this extra levels. So, but for now, just focus on what was it we're at? Yes, and don't forget to, I'm just there in Discord. Just uh, just ask me question. I mean, I'm here. I'm trading. I live by trading, or rather, I live for trading. How do you know? I don't know how you put it. So yeah, it is my source of income. So I'm home. I have my office at home, and then so I'm always available by the computer. If I'm not sitting by the computer, if I just see a message on Discord, sure. Because what I want to do is I want everybody, or as much as I can, people to come to my level of understanding. It's going to be easier for us to trade together. Because if I'm talking about, oh, there is a liquidity resting below there is a liquidity just above there is a buy side liquidity there, and if you don't know what BSL or SSL means, you're going to be lost. But now at least you have understood. First, you start from your daily, you take that, um, you do this. No, sorry, you can start from the weekly if you want. Yeah, you start from the weekly. I usually have different color. Do you know how to make a template? Hmm? So I just change it. I even have up to monthly. My monthly is white color, so I have it M, but I don't use it often. So just change according to the time frame you want to do. Um, start from the weekly and then you go to the daily, you do the same, you go to the 4 hour. The reason why I like 4 hour is because it gives me a midpoint between the daily and the 1 hour and the lower time frame levels. So I just take the 4 hour. On the 1 hour, I usually don't. So on the 1 hour, like this, I trade off my 4 hour time frame on the 1 hour. So if I go to this, if I turn on my, so I'm going to show you an example of what I mean here. So on this Russell, this is Russell 2000, it's American US index. So I will usually plot my levels like this. So on this 1 hour time frame, I can see my daily level. I can see my 4 hour level. I can see the fair value gap on the 1 hour. I can see everything. And then on the 15 minutes time frame, I'm looking for a structure break. So if this was to, now, tomorrow, I'm waiting. This is what I'm expecting tomorrow. Price to do this, do this, do this, do this, and then come do this. I'm expecting this high to be taken out tomorrow before trading down. Because why? On the higher time frame, we are bearish. We've become bearish when we broke this structure on the daily, and then we also broke this structure on the daily. So we are bearish because the dollar is going up. So we are bearish. There is something ICT taught us, is that risk on, risk off. If the dollar is going up, these ones, everything else will be going down. S&P, Nasdaq, Dow Jones, Russell, and even crypto will be going down. So if the dollar is going down, everything else will be going up. So that is a risk on, risk off as classification. So right now the dollar is going up. We are expecting, if you see what I showed you before, if you look here, this is the dollar. You see the DXY, yeah, the DXY is going up. Now I'm expecting, hold on, let me just close this. I'm expecting the dollar to come. Now it's trying to fill this gap. Like I said before, you see, it's trying to fill this gap. So at the same time, there is this other gap here. So if you go to on a daily time frame, it's even better. There is this gap right here. This is where I'm expecting the dollar to trade into. Remember what I said. This, I already mark it out here. This is where I'm expecting the dollar to come to. So as long as this is going up, everything else is going to be going down. So tomorrow, when the market opens, the dollar might just come down a little bit, but over the week, I'm expecting this. So this weekly candle, I'm expecting this weekly candle to expand higher until it gets into this place. Now, it might not have to get there in one day. This might just happen that within the next couple of days, the dollar might just do this, do this, do this, do this, do this, and probably come back into this 50%. It retraces a little bit, but eventually I'm expecting it to find its way up here before the week runs out. Now, that is just what I am what I hope, what I think is likely to happen. Does that mean it's going to happen? No. Does that mean that it has to happen? No. But this is what I'm looking at. And as this one is going up, back to yeah. So like I said, I'm expecting this tomorrow on the 15 minutes time frame for this to happen. Take this buy side liquidity out. Once this happen, I will be waiting for price to come up here. Once this happen, I will be here on the 5 minutes time frame looking for fair value gap, order block, rejection block, no, not rejection block, a breaker, or mitigation block of some sort, some PD arrays. We'll talk about that later. Don't let the word confuse you. I will be waiting for this to happen in here and then look for a short. You can see there is liquidity here. Again, if you look at this low, what can you see? Equal lows. It is very, very, so there's like very clear. So there is liquidity here, and then the terminals, final liquidity here. So, and the same thing is if you look at why I like this is now, I'm going to tell you something why I like trading index. If I go to S&P, for example, this one, let me go to the 15 minutes time frame. It's the same thing, although you see the same pattern in crypto. So if you go to Bitcoin, if everything that's happening in Bitcoin, you will see the same pattern on Ethereum and everything else. You will see the same pattern. So why do you think it's like that if it's not algorithm, if it's not a computer that is doing these things? It's not as if a lot of sellers, they have some organization of crypto buying association or something like that. They have a meeting like I don't know, what do they call them, Freemason, and said, oh, okay, we're going to let's dump Bitcoin. Everybody put 10 billion each, and okay then, and then they say, okay, let's all take our profit here. Oh, by the way, S&P, let's just stop the price here. Let's take it back. No, they're not doing that. They have a computer program that does that for them. The computer decide when to buy and when to sell and how much it wants to do that. So if I look at Nasdaq, it's a similar pattern. If I look at Dow, the same thing. Even Russell, the same thing. So when this is happening tomorrow, I have multiple trade. I have multiple trade opportunity because I have all these other things. Besides, I will be looking at the dollar to show me a direction. You see, the dollar is just consolidating right here, right now. It's likely going to do this. Actually, something bad happened on Friday. I took a gold trade, and I think I took some oil trade, which went well, but I got wrecked trading ES. For the simple, when I mean got wrecked, I mean, if I lose $250, that's not well, depending on the size of your account, that is nothing compared to the size of my account. But the point is, it's something that I should have seen, but I didn't pay attention to it. So yesterday, ICT even mentioned it that a lot of people got wrecked because they didn't pay attention to that. Even professionals got wrecked because the dollar started consolidating, and I was looking for it to make some move higher, but it just didn't. It just wouldn't do it. So, and this was just making a move up and then make a move down. So this is what killed me. So I got stopped out. I enter again. I got stopped out, and then I was just like, okay, I'm done. So I was angry at that. However, back to the dollar. So I'm expecting the dollar this to go up, probably come down, take out these lows, and then move higher. Or I don't know, but I'm still expecting it to trade higher anyway. So that is for that. So this is how I trade it, and this is how I look at price. So here I have my 1 hour, like I told you before, I have my 1 hour here. So if you have multiple computers, like 3, you can just do this. You have your 1 hour, you're looking at your higher time frame levels, and then you have your 15 minutes, and then you have your 5 minutes, and then you have your 1 minute. Because even if you look at EOS now, can I take this out? Bro, are you there? Yeah. Can I take this out? Now you understand this concept. Okay. All right, cool. So I'm just going to take this. I think there is a button you press, supposed to press to take out everything. I don't know. This is the first time I'm having someone live. Okay, I've done some before, but it's not the same. Uh, all right, thanks. Good. Please see if I'm not just telling me so I can improve. All right, good. So just to repeat again, now you see how this came in here, tap into this fair value gap. The algorithm did this on purpose. On this candle, it didn't push it back into this fair value gap because it didn't want to take out this liquidity. It didn't want to tap into this imbalance yet. It wants people to think that no, it's not going to go down here. It convinced people, okay, we're not going low. Now we're going up, we're going up. And then on this candle, on this day, it took it all the way down to take all this liquidity. So now because we're on the daily time frame, it's not that obvious. But if you go to the 1 hour time frame, now you will see the damage. Now you see it more clearly. So here, on this day, on this hour, you can see it just only came here. So people that had their stop under this week, they were still safe, and then it went up. So people didn't think that, oh, they think, okay, now we're going to the moon, and then it just did this and then did this and then did this and then came speedily. Usually when it's coming to do this, it usually come with a full force. If it's going to take liquidity, it do it with a full force. If you look at this kind of view, it came and take it. It does not consolidate when it's going to take it does not consolidate around liquidity if it's going to take it out. Yeah, that go, you see this week, full force, and then it went down. It came here full force and then wiped these people out, and then it went higher. And then you got an optimal trade entry right here. So OT, this is what I call OT. Okay, didn't really tap it, but that is another thing that you're gonna learn later on how to get those levels. It's a custom you have to customize your you, yes, you have to customize it in a way that's between certain levels. So I usually would just mark it out. As always, I have my template for that. So you just mark out your OT levels, and then you just let it be instead of having a bunch of fib on your chart. So that is how I approached it. So now you see how that worked out. So you can just, yeah. I mean, if you go to, let's say, Bitcoin, for example. Oh, yeah. Well, this is kind of surprising. I'm just gonna delete all this. This is probably my daughter that was trying to do some things here. I'm trying to teach her how to trade. She's 9. Yeah. Oh yeah, she knows she can take levels. I can tell you that. She can say, oh yeah, it's pumping. Is Yeah. She actually put up a trade in her paper account one time. I think she made $9 or was it $90 or something. She just did it on her own. She was very proud. Yeah, she's okay. So this is my for my Bitcoin. This is my higher time frame levels. So I have for that, and then I have all this extra. We have been, maybe you've been seeing some post on Discord or something. This is what I was expecting for Bitcoin. When I did this was before this happened. When I did this zigzag, this particular one, um, this one, it played out just so. So then I did this. This is what I'm expecting. I'm expecting this consolidation. If you remember what I showed you before, price will do this consolidation. Remember, jag. Yes, exactly. I like that. So it will do this accumulation, manipulation, and then distribution. So this was power of three that I'm expecting here. That was I was expecting here. So it's already happening. It went up, but I was expecting an explosive up move. But either ways, you already take out sell side right up here. From here, you can see it right there. So so now let's see if it's going to work out and come to this zone. First, it has to come to this zone, and then this zone, and then this is the terminus for me. If it breaks this low, if it breaks this low, that is why I have my alert here. If it breaks this low, then we're going lower. Then this I will be expecting somewhere here, here, and eventually. So you can see where I have my alert on key places. So that is for Bitcoin. So that is why I have it on extra zones. And then sometimes I just draw these things out like patterns. Just, I mean, why not? So I have different things for different levels. Some of them I don't use anymore. It's just there. So this is my this is before I started ICT. I actually this was my some of my old charts when this was happening. So I said break this below equals to bearish price action. So we broke it, and then I drew this, and then I drew this. That this is where we are likely going to go. This is long time I drew this. This hasn't happened, or this hasn't happened. I think I drew this yeah, a long time. Yeah, around September, October-ish. That's when I did all this. And then we broke it, and then we actually came to this level right here. So I'm thinking now, if we keep coming back to this level, and then we're gonna get to this level. Some people is calling for 8K. I don't know. It doesn't matter what you know. What matters is you think about what is likely to happen. If this happened, then I do this. If that happened, then I do that. So you have to be prepared for each scenario. People come, they're looking for other people to confirm what they're thinking. Oh, we are definitely going to 30K, right? We are definitely going to 30K. I don't know. I just wake up in the morning, I go to my chart. I already taken my levels. I'm asking myself, okay, what is likely going to happen? Okay, for example, on the weekly time frame, we bearish. Okay, well, am I expecting this candle to come lower on a weekly time frame or to go higher? Then on the daily time frame, what am I expecting? Where are my liquidity? I'm like thinking like this, okay, liquidity is here or liquidity is there. Where's my fair value gap? I'm asking myself all these questions. Then I check the 4-hour time frame. Okay, what is happening? I check these things, and then boom, then I know what to do. Like, okay, when this was happening, I'm telling myself there is a fair value gap here, there is a fair value gap here. Now we tap into this particular fair value gap, and it eventually came to take out this low right here, 4-hour low right here. So you see what I mean? If you were taking these levels, you would have probably caught this. So if you took levels on a 4-hour time frame, like I told you before, you saw this, boom. Let's go to 2 minutes time. Let's go to the 2 minutes time frame and see what we see. Again, consolidation, accumulation. Sorry, consolidating, accumulating, and then it went down. This is manipulation right here, and then to go up. Again, what did we say before? Explosive move downward into your level. This is a 2 minutes time frame, so you're not going to find a fair value gap around here. And then it move up aggressively. What do you find here on the 2 minutes time frame? A structure break, right? You get your structure break right here. Price came back, tap into this fair value gap. So this will be your entry right here, right here. If you miss that, what do you have here? Another fair value gap. Price came in there, tap it right in here, off you go. You miss that, price came in here. Because why would you get the confidence to enter here? Why would you get the confidence to enter here? Because price already taking out your higher time frame sell side liquidity. Now it is cheap. The algorithm want to go back and take out this high, this high, this high, this high. Remember, the algorithm is only after one thing: buy stops and sell stops. Liquidity resting above and liquidity resting below. And on a higher time frame, it just took out your higher time frame liquidity on the sell side, meaning on the lower side. So it is going to go back and pair it up with the ones here. You see, just watch. Every time it came to these highs, it does a little bit of a retracement. It came here, it does this retracement. It left this one intact. It only took out this one, came into this fair value gap here. Just watch. Don't take my word for it. It came into this fair value gap here. This other block right here, there's another block. Remember, we're on a 2 minutes time frame, so we're on a very lower time frame. It rejected off that other block. It retraced. It took out this liquidity here and this low. Came back to this tiny low right here on the 2 minutes time frame, and then went up. It is going to go after this liquidity here, liquidity here, liquidity here, liquidity here. And eventually, you know what? Let's do it on a 5 minutes time frame so it's easier. So there's liquidity here, 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 and eventually here. So do I think that Bitcoin is going to come up here? Yes, I think so. Possibly here, 24K. It is possible. There is liquidity resting in these places, and it's Sunday, so they have a lot of time to manipulate their algorithm. So that is exactly what happened. What you just witnessed is how the algorithm book price. Somebody is going to, we did all this. Did you see me pull up any indicator? Did you see me pull up? Did you see me pull up? Oh, MACD. Yeah, we are oversold. Oh, I have tons of indicator. I have, I mean, even this one, I bought it when I was doing retail stuff. This is just like an RSI, but I don't really use them. They just there when I open a new chart. Sometimes they're just there. Sometimes I just use it to do back testing. But you were able to find how many entries, all the things that we've done today, you were able to find like at least 10 different entries. Did we use any indicator? No, because we don't need to. All you have to know is this: how to take your level from the weekly. Don't let anybody confuse you, bro. How you have to take your level, important levels from the weekly. You can just do this. For example, it's just an example, just call it weekly strong resistance place or something, you know or you can even do it and remember the rejection block. Remember rejection. I'm going to send you the document. That is going to explain it. I'm going to take your attention to it. You know what? Every time we do this session, I'm going to send you documents that you can practice over the next couple of days. uh, yeah, so you can keep practicing it within the next couple of days, and then the next time we come live, I'm going to do a screen sharing with you because you actually turn up. It seems like you really want to learn. We're going to do a screen sharing. Why? You show me examples of what you have learned. So again, on the weekly time frame, you could call this a rejection block. Or honestly, I don't do this on a weekly time frame, so I would suggest you do it. So, but just take your levels like this. Look for. Now I'm just doing a summary of what we talk about. Just call this. Put a W. So it's always there. Even if you're on the 2 seconds time frame, you know this blue line is a weekly level. It's a higher time frame key area. So if you see the liquidity taken out there, then you know the price is likely going to move to the other direction, or at least on a short term basis. And then you go to the daily. You already done weekly here. You go to the daily, you take this one. Call it, I don't know, daily. You have to do it before the candle gets there. So right now, if you were to take levels for Bitcoin, you will not be taking those. You'll be doing it. Yeah, okay, of course. So then you will do that as soon as the price, you just take your level, you're waiting for price to come there. Don't FOMO, don't do anything. You're waiting for price to come there. You're just waiting. So now price come to that level, you're waiting for a reaction. That is when you go to your 2 minutes, 5 minutes, 15 minutes time frame looking for entry. Because once price come to your higher time frame area, taking out liquidity, it is very expensive. You have to remember that the algorithm will now go back to look for a cheaper price. It bought here, it bought here, it bought here. He sold some off here and then he accumulated. What did he accumulate? More longs. So it was buying more here and here it was selling. It is selling to people who were shorting. They got wrecked because it went up here. So the same thing that people that were long, they got wrecked when the price goes the other direction. So basically that is how it works. So it is buying cheap, selling high. So when it comes to the high, it wants to go back to the cheap zone. If you can keep this, if you can master this and not let somebody convince you, oh, it is the algorithm. Oh, sorry, it is buying pressure, it is selling pressure. If you keep believing that, you're not gonna do well with ICT levels. That's just a fact. So I'm going to show you how I used to take my levels. I was big on a EXO chart. So this is what my chart used to look like. This is just an example. Like yeah. Oh my God. Seriously, I get epileptic when I see this now. I just feel like I want to die. I wasted many months learning like everything. I learned EXO chart, I learned ATAS, I learned trading lights, I learned a lot of all these things. I basically this was it. This was just it. So I have all these TPODs and I didn't even turn on all the levels. So let me try to, if I keep turning on a lot of stuff, you will see a lot of stuff. It is mad. It's like seriously. So these are tons of levels. Soon all the candles will disappear. You won't even see anything. Imagine. So I was blinded. Yeah, yes. So I didn't see anything. I didn't see anything else. I was just like, okay. And then when price comes to my level, I'll be thinking, oh, okay, let me see if I have other confluence. Even if I only have one on, let me see if I have other confluences. So I will start turning on each section, each section, each section, each section until I can find multiple confluence. And by then, the price already, before I do that, the price already gone up. And I'm telling you, at the same time, I will have like tons of indicators that I will plot. I have my, yeah, I even have my, I had my own custom made EXO indicator where I put EXO levels. It was actually useful, but so this is what my chart used to look like. It is crazy, extremely crazy. This is torture looking at it now. Oh my goodness. I have deleted a lot of chart templates and but I kept this for lessons so I can teach people. I can take people back to what it used to look like. But now this is clean. We went through all these things without any Excel, without any freaking indicator on the chart. So, so this is a lot cleaner. This is sometimes if you see I put fib level here, I was just back testing things. I don't really use fib that much. Um, this is just me drawing lines like back testing and also teaching when I'm teaching. Like I teach my kids and some friends or something. Um, remember, I told you sometimes you draw that line to let you know whether if you're on a lower time frame, if we are bullish or bearish. So sometimes I could do this when I see W plus D. It means that on the weekly and the daily, weekly plus daily, we are going down. So it just reminds me if I'm on a lower time frame, if I'm on the 1 hour, if I'm doing something fast, it just reminds me, oh, by the way, on a higher time frame, we are bearish. So whatever you do, remember that. Um, so these ones are just there. I really don't use it. This is sometimes I was doing some back testing where I will use this tool, those, yeah. So, um, so I was just back testing some things. So these ones I'm gonna delete them. I don't really give a shit about them. So this is a higher time frame and extra zones. That is what I do. I just do mine, but I already showed you those. So my friend, so you, yeah, just try to practice these levels and remember if you can remember. Where is it? If you where did I? If you can remember this, the power of three, it will save you a lot of time. So I'm going to refer you back later today or tomorrow. I will send you. So either I send it directly to you or I will show you where it is on the Discord. Uh, oh, okay. Where are you going? Seville? Oh, okay, okay, okay. All right, no worries. I'm here. Yeah, yeah, okay, cool. All right. You have a safe journey, and then yeah, let me know when you get back or anything. Yeah, sure. Yeah, good. Thanks. You can put a comment in the Discord, let people know your experience because this is the first people I tutored, they were kind of close people to me. They're like a group of three, and Clover is one of them, and some of them are already running their own, what is it called? Signal services. And that was more like experimental. Even this one is also experimental. So I'm trying to come to the same level as other people. And this is free. I mean, I just gave you how many hours we've been online now? Like 2 hours. So everything I'm doing on the Discord is free. I don't intend on taking any money, at least right now, anyway. Uh, so it's up to people if they want to learn. It's up to them. Yeah, yeah, good, good. And then I'm here too. So you can just put a comment there and let people know your experience and whatnot. And then we continue. So you just chat me up. whenever you want, bro. No worries. No worries, man. Okay. Bye. You too, bro. Bye.